If you're tired of feeling shame about past financial decisions, worried you'll never achieve financial stability, and ready for a clear plan to take control of your money and experience true financial freedom, you're in the right place. Hey, I'm Lisa, wealth activator, independent insurance broker, and your guide to rewriting your money story. I learned the secret to creating financial freedom and stability after divorce, and I'm ready to share it with you. If you're ready for steady, stress-free income, clarity with your money, and the confidence to spend without guilt, grab your favorite essential oil, take a deep breath, and let's sniff our way through the smell of money. Should you even be saving for retirement right now? Let me ask you a question. With inflation, interest rates, market swings, and nonstop bad news, does saving for retirement even make sense right now? Or is it smarter to wait until things calm down? Today, I want to give you a grounded, rational answer without hype, fear, or financial drama. Hey everyone, I'm Lisa Drennan. I'm a wealth activator and the founder of I Date Money, the author of Lionfin's Money Adventure, discovering the magic of saving, spending, and sharing for children ages 3 to 7. You can get it at Amazon. When you think about your retirement, your future, you might think, I'm too old. Is it too late for me? Even what's going on in the economy, we hear all kinds of stories about, we're headed for a depression, stock market's not doing good, Bitcoin is down, and the market can feel unstable for many reasons. It can be uncertain. Interest rates rising, inflation still present, the cost of living is astronomically high, health insurance is crazy. And for those of you who are listening, I'm talking about the United States. These conflicting signals about growth and slowdown, this creates volatility, but volatility is not the same as collapse. The economy moves in cycles: expansion, contraction, and stabilization, and growth again. So the problem isn't the cycle. It's how we emotionally respond to it. I know I have clients who watch the market every single day. All day long, they'll have, the ticker on their computer screen, just going in the background, watching the market, the Dow Jones going up and down. And it creates panic. It creates anxiety. Every single day, the money's going to fluctuate. But if you talk to anyone in the financial world, they're going to tell you, let it ride. This is normal. We're in it for the long run. And so many different factors determine how well the stocks are doing, how well the market is doing. You have the consumer price index, the rate of job loss, cost of goods. When all of this comes into factor and you look at yourself and you say, maybe I should start saving for retirement, or maybe I should pull my funds and get my money out of the stock and put it into an annuity or an IUL, which is an indexed universal life insurance policy. This is such a personal decision. It really depends on how your money is structured. And this is where most people go wrong. They try to invest before their financial foundation feels safe. Thinking about where you want your money to go. What is the purpose of having a retirement account? And should it be if you're employed with a 401k, if you're self-employed, an SEP or an IRA, a Roth IRA, how should you save it? And there's a big buzz. A couple years back, I had someone on the show who was talking about trust funds. So many of us are in high tax brackets. And when you're paying a lot of money in taxes, especially if you're 59 and a half or older, you're going to get taxed on those retirement withdrawals. If you're working a business, that could be a hefty tax. So before worrying about retirement timing, you need clarity. The foundation is how much money do you need every single month going into retirement that's going to give you financial peace and freedom. So many people miss this part when they're doing retirement planning. You have to think when you're working, most of the time you have an opportunity to earn more money. When you stop working, that's it. No more income's coming in, unless of course you do a side gig. When I retired, I decided to continue working and opened up the insurance business and the wealth activation, I Date Money. So when you think about it, what are you going to do in retirement? You can be just like my husband and retire once and for all and just live off your investments and your pension income. The idea is to create a guilt-free spending plan, the lifestyle that's going to help you enjoy the money that you have worked for. And if you're somebody who's close to retirement, 5 years within age 62, 67, 70 years old, and you're like, I really can't afford to retire. Cost of health insurance is killing me. Or I love working. I want to continue working. There's still time to invest. And if you're somebody younger listening to this, like in your 20s or 30s, please start saving for retirement today. I don't care. A Roth IRA in the United States is going to be your best bet to invest. You're not going to miss the money. The amount of money that you can put in is less than what you spend going out. And especially if you're working for an employer who has a matching program with your 401k, please do the matching. That's your minimum contribution. The goal is to go up to the IRS limits, which are going to change every January. When you think about your future, your retirement, your investments, your long-term wealth, how do you want to accumulate that wealth? There's so many different options. There's your standard investment accounts, your retirement accounts, your property accounts. You can become a landlord and make all this money, passive income, just collecting rent. Hire someone to manage the properties for you. You can become a private lender, thinking about how you want to invest the money that you're building towards retirement. So the rule of thumb is once you're debt free, you have extra income to invest. So earmarking it for investments versus blowing it versus I'm just going to spend it. I'm going to buy this. I'm going to buy that. All those toys don't matter. Really think about how you want to live your lifestyle. And this is going to prevent panic selling and impulsive decisions. So instead of thinking, I'm going to buy something and sell it, I have a client who's moving every year or so, and she wants to buy beautiful things for the place that she's living. But I'm like, okay, but you're only there temporarily, so we don't want to invest a lot of money. Well, I'll just sell it. But when you resell it, you're not going to get the value for it. So if you took that same thought process and said, okay, I want my room to look like this. I opened up, I walked into Ethan Allen and this is how much it cost. How can I duplicate that? We see people do this with clothes all the time, right? Designer clothes. And then they go to Walmart and buy the same exact outfit for a fraction of the cost. This is the same concept that we want to have when we're spending our money on whatever it is that we are spending it on so that we can invest more of it into our future savings. And this is why it's never too late to do that. When we think about the windfalls that we get in life every year, if you're getting a tax refund, what are you doing with that money? Are you investing it to make it grow? Even if you put it in a certificate of deposit that earns 4.5%, a year later, you're going to have a lot more money than you would if you just spent it on a piece of furniture and then sold it for half the cost, right? So does your age matter? If you're 10 years from retirement, down markets are opportunity. There's all kinds of people out there teaching day trading. You can learn how to buy and sell your trade, your stocks on your own. You can hire someone to do it for you. Connecting with a financial advisor is really helpful, especially if you don't want to spend the time to learn. If you're 5 to 10 years out from retirement, your strategy matters more than timing. And if you're near or in retirement, income stability comes first. You need to know your numbers. And if you're pulling money out to survive, that's not investing, that's stress. Structure protects you from becoming a forced seller. And this is why having a system in place with your money is so important. Knowing exactly how much income you have coming in and what is going out is going to set you up to know how much you can invest for retirement or how much you're going to need in retirement. And this is going to help you decide whether or not you can retire. And so running the projection and running the numbers so that you can build wealth is the most important step that you can take today. And I can help you with this. A wealth building strategy for retirement and even estate planning will give you the peace of mind. You can book a call with me. The link to schedule is in the show notes. So when you start to think about investing your money for retirement, the first thing you want to do is write out your goals. How much money do you need? How much money do you have coming in? How much money is currently invested for retirement? And then connect with a financial person to run those numbers for you, to give you a projection to see, okay, this is how much I need. You can check with your employer for the 401k matching. If you're not doing that, fund your Roth IRA. It is the best investment that you can do. So your original question, should you save for retirement right now? Yes. When your money feels safe and you have it intentionally set up to care for your needs and your wants, then you will feel safe and confident investing your money in retirement so that you know exactly what your goal is, how much you need to have so that you can retire at the age that you decide. And when you do decide to retire and you create your spending plan for retirement, most of you will get a Social Security benefit. Go to ssa.gov and pull up your estimate. If you haven't established an account, do that. That's very important. Look to see what you can get at age 62, age 67, age 70. Consider any pension income that you may have or any other income that you might have in your retirement if you decide to leave your career job. Once you have this information in your hands, you'll be able to answer that question very clearly. And then you'll have clarity, the goal to retire, and you'll know exactly when to do it because you'll know exactly what's coming in. A lot of people think that they can't retire and that they have to work because they haven't looked at the numbers. They're allowing these money stories to dictate their work ethic, their work habits. When you look at the numbers, you will know. And when you know, you'll be able to plan. Because remember, it doesn't matter how much money you have, it's what you do with it. Hey mompreneurs, I hope you enjoyed today's episode. If so, please follow the show and share it with a friend who's rebuilding her finances after divorce. No spreadsheets, no restrictive budgets, only confidence to build financial freedom. Also, please drop a quick 5-star review so more moms starting over can find this. It lights me up to know this podcast is helping you. Inhale confidence, exhale scarcity. I'll meet you back on Tuesday for another episode. It doesn't matter how much money you have, it's what you do with it.